I actually think these guys are more inflationary beneficiaries than anything else, because if you think on that GMV line, the faster inflation grows, the more food that they sell, the higher the basket sizes, which actually helps them. And actually, the only cost that they've got, really the main cost, is on those rider costs. And they are passing on some wage increases, but they're broadly an inflation beneficiary on the GMV. On the margins, it's tough. They've obviously just bought Glovo, which was a private company, mainly operating in Spain and Italy, and that's been really hurting margins. Was much more loss-making than people expected back in kind of February, March. Which I think is part of the mix effect, and that's really pressuring on margins into the future. But I think when we look at it, all the levers that they're pulling, minimum order values, reducing some of the vouchering that came out this morning, which is pretty positive, is all positive to moving towards break even at a group level in 2023.
William, as I take a look at delivery hero numbers now and put them together with what we saw from HelloFresh a couple of days back, it does stand out to me that the pandemic trends are still fading. We went from triple-digit gains during the pandemic to double-digit, and it does feel as though that's something investors have to take on board from here, that there's still a new normal that's coming for some of these firms. What do you say about that front on the growth numbers?
Definitely. I mean, we're 100% seeing some impact of pandemic comps in the numbers, which are hurting growth, right? You've gone, as you said, from triple-digit growth down to double-digit growth. I think the thing that we need to do, though, is take a step back and say, look, these businesses are still growing double digits, particularly Delivery Hero, helped by its non-European business, in the face of higher inflation and a post-COVID reset, which I think is pretty impressive. But I think the key thing that we're seeing is actually orders are coming down. AOVs, average order values, are increasing as inflation creeps through. People are still buying this food, but the demand overall is coming down, and that's very simple. If we're traveling more, if we're not at home as much, things like that, and restaurants and pubs are open, it means that demand, that those order frequencies are going to come down. That's going to be a little bit painful. The worst of those comps has probably hit. If you think back to last year, everything started to reopen, at least across most countries, into H2, and therefore those comps become slightly easier into H2.
William, something that captured my attention in the last 24 hours or so was this news flow from DoorDash and Meta, that DoorDash has teamed up with Facebook's company Marketplace to effectively make the exchange of goods. This is fascinating because we first up had this delivery model where it was purely about delivering food. Then it became about delivering groceries very quickly, much quicker than just ordering groceries off a supermarket, very short windows at a time. Now we've got an evolution towards delivery from effectively a social media company. Is this telling us about some of the growth opportunities still yet to be uncovered if these businesses can stretch onto territory that has been owned by other companies until now?
Yeah, I think so. I think many of these companies are very excited about these new verticals that they call them, and the idea of a deliver me anything platform. I'm a little bit more cautious on that, though. I think, look, this business works very well for food delivery. You want it very quickly. It saves you time. Works pretty well for groceries, although it's a much more affluent proposition. The next kind of verticals that people talk about are pharmacy products. If you need medicines, you could get them delivered or delivered on a regular basis. And then I'm a little bit more cautious about the general merchandise or the non-food opportunity. I used to be a strategy consultant, and many of the fashion businesses set up rapid delivery propositions back in 2017, 2018, and there just wasn't the consumer demand. Are you willing to pay £5–10 to have something delivered in 30 minutes when actually you can still get it delivered next day just as quickly? Do you need those items? So I'm a little bit more cautious on some of these new verticals, but I think it's an exciting opportunity. It'll probably vary by different countries, different categories about what will work.